Welcome to this introduction to the Budget Changes tool, part of the Risk Assessment Toolkit offered by the University of California Office of the President, Office of Risk Services. The UCOP Office of Risk Services offers several of these Excel-based workbooks to meet a diverse set of risk assessment needs across the UC system. Each of these tools has been constructed to provide insight from multiple perspectives. For a complete list of the tools available in the Risk Assessment Toolkit, refer to the UCOP ERM website. This webinar is focused on the Budget Changes tool. This tool will help you consider the potential risks and benefits associated with changes to your budget in order to help you make better informed decisions. If you have a question about this or any other tool in the Risk Assessment Toolkit, you can send an email to the ERM Help Desk at erm@ucop.edu. It's important to understand that this tool is designed to help you make better, more risk-aware decisions, but it will not tell you what the right answer is. These tools function to support a methodical thought process that can be consistently applied or to thoroughly evaluate various risks, enabling the user to make better informed decisions. Now, the nature of doing a risk assessment is highly subjective, and it only provides a user's perception of risk and related impacts. This is why it's important to also evaluate correlating data along with the risk assessment whenever possible to validate your assumptions. Inaccurate data or other information not provided by the user will naturally affect any results, decisions, or recommendations, and final decisions should be made independently by each organization using this tool. Now, with that in mind, let's walk you through the Budget Changes tool and show you how you can use it. We'll start at the introduction by filling in some basic information about who's using the tool. It's in these boxes here, and then save it with a unique name in a location we can remember for later. One note before we get too far into this: when you open the file, you may get a warning about macros or security, such as this one up here. It's probably because the file has a macro to allow the data to be exported into a flat, comma-separated value file. Essentially, if you're planning on using the data you enter here in UC's Enterprise Risk Management Information System, also known as ERMIS, you'll want to enable the macro. But the tool will still work fully if you decide not to enable the macro. Of course, please make sure you're adhering to any IT security policies your organization has. In some cases, your computer security settings may prevent you from enabling the macro altogether. In these cases, if you wish to use the macro, you'll need to work with your system administrator to alter your computer security settings. Okay, so I'll enable this content. Click OK. Let's get started with this button right down here. The first thing you'll see at the top of the page is the list of steps. Each of these is a button, and it will take you to that step of the tool. Each page has the same set of buttons, so you can move forward and backward throughout the tool, or skip ahead as you wish. We'll begin on this page by listing our target reduction amounts. Enter one amount for the current year and another for the long term. Then we'll fill in the spaces below with the list of possible reduction actions and their impacts. We can see here that laying off John Doe would decrease our expenses in the current year and would represent a larger decrease in expenses in the long term. Conversely, we can see here that deferred maintenance, such as putting off repairs to a laboratory roof, doesn't have any long-term cost reduction, but does have an effect in the current year. Now, this tool numbers each action that we're listing here, and it can accommodate up to 100 different actions. Note that actions you include may increase revenue rather than decreasing expenses. It's also important that you give yourself many options by listing many actions. The total amount for all the actions should be at least 110% of your target reduction amount. This is calculated continuously here. So the more options you list, the more flexibility you'll have in deciding which ones to implement. In each of these cases, there are potential risks and benefits. In subsequent steps, you'll consider the risks and benefits, finally arriving at your decision on which of them to implement. Now, once the potential actions are listed, we're going to move on to the next step. In this step, we're considering potential benefits of each action. We'll start by deciding if these scales match how we want to characterize the potential benefits. If we want to change what any of these words mean, this is the place to do it. Just as every cloud can have a silver lining, the tough decisions you make in reducing expenses or increasing revenue can yield benefits for your organization. For example, we can see here that creating administrative pods can increase efficiency, ease compliance efforts, and improve reporting and stewardship. The term administrative pod in this context would apply if multiple departments within one college were to pool their administrative resources and work from a shared resource of administrative professionals rather than having each their own, which would therefore increase the efficiency. You may reduce headcount in that case, which would then make it easier to have some sort of reporting and stewardship requirements met or some compliance requirements met. Now, if you can come up with other types of benefits to quantify, you can list them in the extra spaces provided here and here. For instance, if we could identify a reputational benefit to selling agricultural byproducts, for instance, some benefit to the brand of the university, for instance, then we could insert reputation right here. And then with agricultural byproducts, we could say that that would be, say, a moderate benefit. Again, we could characterize others as we saw fit. Now, let's move on to the next step, which is considering risks to environment and life safety. As with the benefits page, we'll start by deciding if these scales match how we want to frame our assessment of the risks. That's low, medium, medium, high, and high. And we have our definitions right next to each of these. Then we'll decide how each action, again, these are the same actions that we listed before, the carry forward, will impact the environment and risks to life safety. As before, if there are other areas we want to consider separately, we can do so in the extra spaces provided here. Now, in the next step, this is our opportunity to consider the financial impact of these actions. Scale matters here, and so does risk appetite. For instance, what constitutes a high severity risk for the campus as a whole might be operationally disabling for an individual department. So, the way we account for this is we start by entering your organization's annual budget, and then you can decide to either leave the preset scales as they are or modify them to suit your risk appetite. So you can increase this, for instance, if you said that 1% of your annual budget, well, I'd prefer 2%, changing this to 2, we'll change that number as well. Now there are 6 different types of financial impacts for you to consider separately, and another space for you to add more if you need to. The 6 steps are liability claims, improper accounting, conflicts of interest, fraud, waste, or abuse, facilities damage, and fines or penalties for noncompliance. Again, for each of these here, we'll make a selection from the drop-down menus that show up here. In the next step, we're going to consider mission environment. The University of California has 3 core missions. That's teaching, research, and public service. Administration is included here as a mission because it's what holds the other missions together. It allows us to execute them all 3 of the other missions effectively. So, to the extent that each action may impair your organization in serving these missions, you can note that here. Again, as before, we start with our scales, make sure that they match with what we would like to frame our scales as, and then we would select them here when we decide on how they will impact our organization. Next, we consider impacts to stakeholders. Stakeholders listed here are faculty and staff, students, and customers. As with before, we decide on common meetings for our scales, and then move to how each group of stakeholders may be affected by each action. Now, the next step covers reputational risk. Here, there's only one column of selections to make, but it works just like the previous steps. First, decide on the scales, and then decide on how they apply to the potential adverse reputational impact of each action. So here we see that, for instance, a low reputational impact would have rumor, no news items associated with it, and that a medium-high reputational impact would be public embarrassment, high news profile, third parties taking action. So here we have each of these scales is defined, but you can make these different as you see fit to suit your organization's risk appetite and also to suit your organization's profile as well, such as your public-facing profile, your exposure to interface with the public. Now, the last step of the assessment process is what we call separation of duties. Now, this is very specific to the University of California's internal practices, but the concept can apply more broadly. That is, administrative duties are separated to maintain accountability in proper accounting functions. The purpose of this, so we actually have a matrix that shows the different duties. Click right here and go right to it. The purpose of this matrix is to ensure that the same person who prepares documents is not also the person that reviews them. This matrix identifies the primary preparer and secondary preparer and a reviewer. If you're eliminating the primary preparer, for instance, John Doe in column number 3, because remember, laying off John Doe is one of the potential actions that we have in our list previously. This would leave no secondary preparer, or if it would leave no secondary preparer, it implies that the reviewer would also become the preparer for these sorts of documents, resulting in a separation of duties incident or issue. Now, if you determine that an impact to administrative personnel would create a separation of duties issue, note it on this page previous here. That's this here. Come back to this button, step 8. Violate separation of duties, laying off John Doe would create a separation of duties issue, so we're going to just change this to yes. Okay. Now note that an action which creates a separation of duties issue will be given a much higher risk rating in the final step. So let's get to that final step. That's implementation. Here we see our actions. Just as before, the dollar amounts, and also a risk score, a benefit score, and whether or not they create that problem for separation of duties. A higher risk score indicates greater risk, and a higher benefit score indicates greater benefits. So this is where we make our decisions. In the implement column here, we'll choose yes, no, or maybe from the drop-down menu for each action. Anything for which yes or maybe is chosen will be added to the running total here under sum of implemented actions. So for instance, if we change layoff John Doe to yes, we'll see that these numbers change upward. Put it back down to no because that risk score and that separation of duties violation it seems pretty severe. Bring it back down, our numbers fall again. So, if you want to see sorted lists of your actions to help you decide, you can use these 6 buttons here to view them all, sorted by their current year value, permanent value, or risk score. For instance, this will show me all the actions that we have, sorted by the risk score from high to low. This one here will show me just the implemented actions, again, sorted by risk score from high to low. This is the ones for which implement was yes or maybe. This button here appears on all the 6 pages with sorted options. It just returns us back to our implement page. So, once you've decided on which actions to implement so that the total equals 100% of your goal, you can see here we're only 80% and 90%, so we'll make a couple more changes here. If we implement that one, and let's implement this one here. We're very close to our goal. Let's say, well, we'll say this is close enough for now, but then again, we'd want to probably add more actions, again, to get to a much higher percentage, so we would give ourselves some more options. So, once we've decided on which actions we want and we're comfortable with the decisions we've made, we can click on the Export button here to create a file that contains all of the entries that we've made in a comma-separated value format. Now, you want to save this file separately with an appropriate file name also. So, this concludes our demonstration of the Budget Changes tool. Please remember that any results of any risk management decision will only be as effective as the accuracy of the data that you provide in the tool. Like the others in the Risk Assessment Toolkit, this tool is just a tool. It doesn't provide answers, but it helps users analyze their options. Questions or comments about this tool can be directed to the ERM Help Desk at erm@ucop.edu. Thanks for watching.
Thank you. Please stand by.